Hey friends, Mayhem here. It's Sunday, June 19th. Happy Father's Day. Just wanted to take a moment to give you all a quick update on what's happening in the S&P 500, and putting this video out there with a little bit of help from TraderAid. This is a platform that I co-founded with my good buddy Horse, and what we try to do is help retail investors and traders become more consistent. So we're going to talk a little bit about the S&P 500, but I just wanted to put it out there. If you're interested, visit us at traderaid.com. So the S&P 500 is in a structural downtrend. It really has been since January of this year when it peaked, and then it started to really roll over materially and make a new low, and then a lower high, and then a new low, and so on and so forth. You know how the story goes. You could see the price action playing out on the chart. I'm going to put out a couple different indicators here as to why I think we're still in a downtrend, but maybe we get a bounce here, sort of a counter trend rally. So first, you could see that the 8-day moving average were well below that. I only really look at this market constructively for short-term price action if we're above that moving average. That's the blue line. Secondly, you can see we're well below the Ichimoku cloud, and the cloud has a bearish twist, which is another warning sign. So that's a pretty bearish indicator. And then finally, if you look at the Williams oscillator on the bottom, you can see that we're in pretty strong negative momentum territory. You could maybe make the argument that we're a bit oversold here, but that doesn't mean anything. Oversold markets can go much further down, especially when they're illiquid and structurally weak, as this one is. The one thing that one can hang their hat on here is this 3674 level is just around this key area of potential demand. So we want to just kind of take a look at this. We're going to zoom out just a little bit to a weekly chart here, and we could see why this demand zone actually might matter, because it is pretty big, and if we cut through it, you know, basically we're not going to have a lot of support until around 3500. So I think in the short term we can get a counter trend pop. Wouldn't be too surprising. You know, we have seen some degree of seller exhaustion. On the other side of it, however, if we do not, and this thing really starts to cut below, it would also be kind of cutting below the downtrend channel that the S&P 500 has been in for some time, and that would portend to a steeper leg down. So remember, one thing that's very important with charts is they don't tell you the future. They just tell you the sort of risk and reward, probabilities, that kind of thing you can model for. And so it's really important to use charts for that and only that. You can't necessarily look at a chart and say, okay, this is where the price is going to go. Instead, what you can do is look at supply and demand zones. You can look at indicators. You can look at price action. You can look at kind of where there's been stickiness in the past, and what are key areas. Like right now, we're at a pretty key area. So if we break below it, that means downside that is increasingly more aggressive is likely. And if we bounce here, we could get a counter trend rally that perhaps puts in a lower high or even meets the last high. I think those are the two probabilistic outcomes we want to take a look at given where we are and what's happened to the markets. And one of the biggest drivers of all this has been a very aggressive Fed, inflation, war, and of course the prospect of recession with a weakening economy. So if you look at all these things put together, it's a dangerous cocktail, and either one of them, any of them alone could be problematic. All of them together, something to keep an eye on. The sort of bearish macro, fundamental, and technical case can still be made here. So I'd only be looking for a short-term fadeable pop, and potentially I'd be putting on more shorts there. Anyway, hope this video is helpful to everyone. Again, it's brought to you by TraderAid.com. Check us out on the web, just $200 a month or $200 a year, where you can sign up and become a member, and we post research, trade ideas, educational and informational resources, as well as interviews with traders, live streams, and recaps in video and audio format of what's going on in the market and at the macro level. So we're a full micro to macro service. Hope everyone's having a great weekend. Look forward to seeing you again soon.